see your faces. Man. Tuesday. Alright, let's see. I need to get myself into mode here and figure out what I'm doing. Cool, guys. Well, welcome, everyone. So good to have you with us. Let's crack into it this evening. We are in for such a treat. As always, we have got our legend, Michael Jacobson, with us this evening to continue dropping value, which is consistent, right? All the time. And I'm sure some of you just got absolutely wrecked to be able to not just meet him in person last week, but experience him teaching. So, Mike, we'll bring you on in a few minutes. But I thought, to start off with, wow, guys, what a week. So, I mean, last weekend, obviously having our live event in Auckland, for those that can make it, that was really special. And we are this close to announcing the time and place of our next one. For now, I'll just say, TAUPO, get ready. We are coming for you. So anyone in and around TAUPO, it is going to be very, very, very fun to gather there again. And I'm busy working on some other spots around the country, guys. I told you I am in full go mode. And if you're keen for it, if you want to put some people in the living room with me, I will come. So we'll get to that, but for now, I just want to say a massive welcome to all of our new members that have joined us in the last week or so. I'm so hesitant to name names. I know I'll forget someone. Let me think. I know we've got Solomon today, Alfonso like 5 minutes ago, bro, right in there, in time for tonight. Love it. I know we've got Sharon over in the UK. We have got, let me think, we've got Kevin over in America Ways and Caleb as well. And let me think. I'm forgetting one for some reason. Liam down in Tauranga with Mike and Mandy. So good to have you, bro. Andrew as well in Morrinsville, I believe. Don't want to get it wrong, but it was so good to meet you at the live event as well. So I really hope I'm not forgetting anyone right now. Sorry, I've been up since 4:15 or so we'll put it on to that. But guys, so stoked to be able to meet so many of you in person last week. Looking forward to more of that. And we are spread across about 12 different countries here, so let's make it easy. That's all meet in Croatia in September. That'll be an absolute blast where we can all just go to the same place and hang out with another 13,000 odd hungry people on the same journey, learning the same stuff. I just feel like that would be an absolute party. I can't tell you how powerful those live events are. Been to a couple, and I can't wait for the next one. So September the 7th to the 10th in Croatia. When you log into im.academy, guys, you're going to see info there right there on the event. I think it's called Breakthrough. So put that in the back of your mind, guys. Start thinking about it, start pricing it, whatever. When you start to just think about those things and start to really quantify what it looks like, you'll be surprised at what happens in terms of things just breaking open for you to get there, be there, get paid to be there, whatever. Miracles happen when you get clarity. So I'll leave it at that for now. Let's see. Okay, so because we do have a bunch of new people this week, I am busy mapping out. Firstly, okay, I've got a lot of things I'm busy updating. Jess and I spent about a couple hours on Sunday evening mapping out my schedule, really tuning in of how I can up it and just bring more for you guys. So every second Sunday night, guys, here's something to remember. I want to put out some form of a visual schedule you guys can see, but every second Sunday night, starting this Sunday, I want to start doing Facebook Live testimonies with you guys. So this Sunday, shout out to Lisa in Taupo. She's rocking us off. We're going to knock it out on Sunday night. So 8 p.m. Sunday night, we're going live. I'm going to interview her for 10-15 minutes, talk about her story, her journey. And then from there, we'll just keep going and maybe just, show a bit more for those that have tuned in for how they can get plugged in with us. But I want to make sure you guys are aware of that. So every second Sunday night, really cool opportunity on Facebook Live to, tag some friends to come and listen to those of us that are doing the thing. We're in here, we're learning together, and there's some real powerful stories that are going to encourage people. So I know so many people got so fired up listening to Elaine share her story at the live event. And on our Zoom last Tuesday, that Zoom was absolutely stacked. So just thought, let's keep running with it. Let's keep doing it. So Sunday nights, every second Sunday night, we're going to do that. What I'm working on every other Sunday is maybe afternoons, is for us to start bringing in some real high-level IM leaders to come and do some extra leadership and mindset stuff for us, slightly more appropriate hour than 4 a.m. But guys, I really want to encourage you. The Freedom Revolution trainings that they put on every Sunday morning, I know right now with daylight savings, it's 4 a.m. for us in New Zealand, and it's even more crazy, obviously, for you guys in Australia. If you ever, like the replay, when they go Facebook Live, the replays are there instantly. So I'm up usually at 5 a.m. So I was on that replay as soon as it was done at 5. But I want to bring some more stuff for us in the afternoon, potentially, where not too many people are overly crazy busy on Sunday afternoon. So I thought it'd be a cool way for us to just dial into more mindset and leadership stuff like that. For now, that'll do. I'm working on a few more things, but we'll leave it at that for now. What's up, Tate? I can see you there jumping on Dad's lap. That's so cool. But right, guys, let me do this. Let me real quickly load up the main site. Just to, I feel like just give a real quick run through of a little bit of a tour to give you guys a bit of a quick onboard for those of you that have joined in the last couple of days. And it's always fun for everyone else to see a little bit more of something that you may have missed before. So let me do this. Let me share the right window. What happens if I share that one? Let's go with that one, right? Okay, can you guys see my screen? Drop a one in the chat if you can see. There we go. There is the breakthrough in, that's the Croatia event, September 7th to 10th right there. Cool, thanks for the one there, Lisa. Right, so before that, oh, that's new. Sorry, colors. Wow, that is brand new. Okay, anyway, seeing new stuff right now. So guys, right now, when you log in, when you're brand new, if you're an IBO, this is what your menu will look like. If you are a customer, which 90% of you guys are, then it's going to be a little bit shorter. Little bit of a quick one through in here. Personal info tab is where you can go and adjust things, your subscription, either upgrade or change, whatever. If you're on Empowered Pack, you're able to, change month to month, some of those options in there. You're going to have something that says my referral links. If you're looking for your link, if you've got a friend that wants to get started, that's where you're going to find your link. Besides that, guys, TLX portal, when you load that, that's how you go and log into TLX and start searching some destinations. If you've got TLX added, then you're going to click IM Center. For most of you, this is where you're going to get started. If you're brand new, you are going to start with IM Center and you're going to go through. Let me log in myself in here. It's not saved all my stuff. That's wrong. Sorry, I haven't logged in for so long this way. It's normally saved. Let's see if that's going to work. What's my password? There we go. Hopefully that works. Should do. When you're brand new, you're going to start in the academy. So some of you have signed up for SFX, DCX, TBS, FRX, whatever your base is, wherever you're starting, you're going to come over here in IM Center and it tracks it and it gamifies your study process. So first up, the three things to be aware of really are academies and go live. And for right now, strategies isn't all that relevant for us because we have got Kill Shot inside of TradingView. And if you're brand new and if you haven't got it yet, guys, Jay sends his apologies. He's got a list of almost a dozen names from me and he loads them once or twice a week. And normally he does it today, but he apologizes that he'll do it tonight for us. So tomorrow morning, those of you that haven't got Kill Shot yet, if you have sent me your TradingView name or your enroller has, you will have Kill Shot in the morning. So that's where we will be getting it when it's no longer in TradingView once they finish building his scanner. But real quick, academies, you're going to click in here when you are brand new and you're going to click on whichever one you are doing. So if it is time-based trading in English or if it's Forex in English, whatever it is, you're going to ram through these videos at least the 100 and 200 series to get started. In TBX, guys, you got 2.5 hours here in total. So I smashed this all out in one night. But obviously, I went through 14 hours worth of FRX and a few hundred in DCX. So this was a lot of just a refresh for me. But you got academies in there. That's where you're going to go and get all your foundations in, all your terminology, all your language. That's where you're going to start. From there, it's all about go live. So it's going to take me to go live from here. And then from here, guys, most of us, we're all tuned into Jay. Now they've put futures there. It's bumped him to the side. Where is he? There he is, guys. Number 5 educator out of 170 within his first 60 days. I mean, yeah, we'll leave it there. So if you are in Forex, you'll find Jay in Forex. If you're in DCX, you'll find him there. If you're in TBX, you'll find him there. I'm going to screen, how am I going to do this? I'll screen share. I'm going to quickly bounce between images here because a lot of us, depending on, I've had some of these chats individually with people. I just want everyone to be aware of the different ways and times that you can tune in with Jay. So where's my screen share options? Sorry, my Zoom controls have disappeared. Bear with. We're, oh, come on, where'd they go? Okay, if I unshare, oh, there we go. Stop sharing and share screen. I just want to show you this image so you can see Jay's schedule. So right there, guys, it says, if you're on TBX, he's live. It's 6 a.m. These are MST times. So I can tell you now 6 a.m. MST is our midnight in New Zealand. Forex, that Monday, Tuesday, Thursday in New Zealand time is actually Tuesday, Wednesday, Friday, and 11 MST, I believe, is 5 a.m. New Zealand time. And then on Thursdays and Saturdays on DCX, he'll be live at what would be our 6 a.m. So Jay is teaching his kill shot strategy in there live. There's like 10 sessions a week that you can tune into him, guys. So that's where you're going to go and find him. So you'll click in here, for instance, if you're in Forex, he's going to be pretty close to the top. I'm pretty sure. Where is he? Maybe not. He's down there. You're going to click on his face. There's his sessions. There we go, 5 a.m. all preloaded for you in the time zone that you have selected. If you're in DCX, same vibe, same with TBX, etc. So you're going to go in there. You're going to watch his favorite section first. Once you finish those videos in IM Academy, the foundations, you're going to click on him, and then you're going to see recorded sessions. These are where everything is that if you've just missed a session, the most recent ones are all here. But he's going to save his bootcamp and like onboarding sessions in there. Sorry, let's get rid of that. And no, I want to load that. Sorry, favorites. Under favorites, here you're going to see bootcamp, day 1, day 2, day 3, day 4. Now, obviously, Mike obviously recorded our own bootcamp of this, and some of you, if not all of you, have got access to all of that already on my YouTube channel, that playlist. But this is Jay teaching it. So Jay was teaching this the same time that Mike was teaching it so that we could do it live as a community together. So massive shout out for that effort that Mike put in for us. But you're going to go in here and you're going to work through the bootcamp, right, guys? And once you finish the bootcamp videos and you've taken notes, then you're going to track more with him live day to day as he breaks down the market every day. Because once you've gone through a bootcamp, you're then going to be live trading and watching, or at least trading more on demo and actually working through the thing. You guys also have an issue with the sound. Sorry, guys, if anyone's coming, if sound's not clear, please let me know. Otherwise, yeah, hopefully it's good. Drop a 2 in the chat if the sound is clear. Okay, cool. Thanks, Lisa. Might be volume on your side, Alfonso, maybe. Yeah. If it's widespread, I'm sure I'd hear about it. So maybe punch your volume on the device that you're on, different ways. So anyways, guys, I want to keep this short. So besides that's really the quickest little tour I can give right now. We'll keep it at that for now. Besides that, whoever enrolled you will definitely take you through a bit of a walkthrough personally. And I'm working on a bit of an onboard 2.0 as well as something extra for the team. So I'll let you know more about that soon. But for now, I want to get myself out of the way, get on with the evening, and bring on our champ to come and drop some value. So, Mike, I'm going to pin you and say once again, man, thank you so much for driving up, spending the night in Auckland, and just dropping so much value live, man. I know you got into the zone, and the night went longer than any of us thought it would. But man, everyone kept asking questions. Everyone was getting so much from what you were dropping, and there was so much value there. So, guys, drop value in the chat if you have been blessed by this man and the wisdom and experience that he brings to us, not just in our chat every day, but obviously here on Tuesday nights and in person. And yeah, man, just want to give you the floor and say it is yours. Take us wherever you want tonight. I know that we might be looking at divergence a bit more and seeing what's going on in the markets, but yeah, man, I'm going to get myself out the way and say the floor is yours. Go for it.
Cool, thanks, Matt. Yeah, it was awesome to meet everyone up in Auckland, and you just get a feel for who everyone is and where they're from, and just put a bit more reality to the names and the faces. So I really loved it. It was great to be up there and had a lot of fun. So obviously I had to spit a lot of fire, and it was quite fast just with the time we had. So I just wanted to try and get as much value as I could in the time available, and hopefully you guys got something from it. But what I'd like to do is just keep running in the same vein a little bit tonight, and look a little bit at a bit more divergence. And one of the things that is firstly super important to understand is that there's lots of different types of divergence. And you know, trading is a journey that sort of never stops. You're always learning. There's always more things you can add. At the moment, those of you who've been here for a while will be you'll be working with a strategy, either it's kill shot or dynamic edge, but probably kill shot. So that's the most important thing, is to get locked into that strategy and to really get it working for you, and to learn the rules and learn to follow the rules. That's the most important thing, because anything else is really just overlaying onto that strategy. But you only need to learn one thing very well to be successful, and do the same thing over and over and over, and just get better at flawlessly executing it. That's actually all you need. But as we grow, there's certain things that we can overlay on top of that strategy that can add even more value to what we're doing. And one of those things is divergence. And so what we basically looked at was divergence was seen that we have a momentum indicator, and You can use RSI. I often use the MACD. To locate that, we go up into indicators. We simply type in MACD, and it's called the Moving Average Convergence Divergence. That's what its full name is, but we normally just call it MACD. So if you click that, you'll end up with this histogram and squiggly lines. Standard settings are 12, 26, 9. That's all you need. And just briefly again, what we're looking for is we're looking for the price and the indicator, or the mountains or valleys in the indicator, to go in opposite directions. So for example, let's just get one from the other day, and then we'll look at the one that took place this morning. Zooming back. Okay, let's just use this one here. So what you can see is we had a high in price, then we had a new high. So we have a higher high in price. Now, on the MACD, we have a corresponding high. Now, it's not here. The most important thing is the high in price. Now, the high in price is this candle. Okay, so what we're interested is in the crossover. Now, once this crosses over, now again, this indicator is a formulaic expression of the price and the moving averages. You can dig into it yourself to understand it, but basically we're looking at this first crossover, and what that does is it gives us our first peak. Okay, so we end up getting this peak on the MACD, and then once we've got that first peak, we want to look for a second peak. But on price, if we believe that the trend that has been up is coming to an end and momentum is slowing, then even though we have a second higher high in price, on the momentum indicator, the corresponding second high will actually be a lower high. So you can see that if we just put a line on the highs here, on the crossover, it's about there. And then notice that the second one is there. So when the red line or the orange line, you can change these, crosses over, that gives the confirmation that we actually have a lower high, or we can call it a lower peak. So again, this would be our first peak. This would be our second peak. Now, what that's telling us is that the buyers are trying to push price higher, but they actually don't have enough momentum. There's actually not enough power to do that. And so this MACD indicator is telling us that the momentum is weakening, and that's why we get divergence. So they're telling a different story. Price wants to go up. The momentum indicator is saying, sorry, I can't do it. We're stopping. And so we end up going in opposite directions. Okay. Now the same is true if you're buying. So let's just have a look at if we were buying. And again, this is an example from let's just go back here. Here's an example from the other day. We can see that we have our first low in price, and we have our first valley, okay, as indicated by the blue line. Once we have that, we're then looking for, because price is going down, we're looking for a new low. So we've now broken that previous low, and price has gone lower. Only a little bit, but it has gone lower. However, when we achieve that new low, you can see that we have a new valley created, but look how much higher it is. It's very, very steep. So this is telling us that even though the sellers are trying to push the price down, the momentum is not enough to actually sustain that move any lower. And so what happens is we get our second valley. I'll just zoom in so you can see that. But you can see that it ends up being a V shape, okay, on the blue line. All right. And then obviously I like to put a line in to actually confirm to my eyes that it is actually higher, but obviously it's very obvious to see. So there's the first V, there's the second V, and you can see it's a lot higher. So we have a lower low in price, a higher low on the indicator. And sure enough, that was the end of the move. Price immediately exploded to the upside by 130 pips. So what does divergence do? It basically indicates the potential and highly probable end of a trend. Now, again, there's lots of different types of divergence. I'm not going to teach them all here. You can go on your own journey for that. But what I am going to recommend is that because there are a number of ways to look at it, I would recommend not looking at the histogram for now. Unless you've already done dynamic edge, I would suggest you look at the actual blue line, which is the MACD line, and basically just go through your charts and learn to identify, and we're just going to do that now, learn to identify where you see divergence and what price did after that. So for example, this big move up here, in fact, there's two here, and at each stage, we see that there is a temporary good-sized pullback in price. So here's our first high on the MACD. Here's our first high. We then break that high and go higher. But look at the MACD. That second mountain is a lot lower. So we have divergence. Let's just remove this one, not that one. Let's remove this one here. So you can see price is slightly higher. And what does it indicate? Well, that bullish trend that was coming up here has come to an end. And sure enough, we get a healthy pullback from that high for 52 pips. Then the trend continues higher. We then make, okay, now this actually gives us 3 examples, but notice every time you'll see a pullback. We then make a new high, but notice the MACD is still lower. And then we get another pullback. So there's 2 in a row, and this one's actually extreme. We then get 3 in a row. We then make this last push high on New York Open. Okay, so here's our new high. Here's our mountain. And let's forget about this one now. New high. And look, new valley. And you can't see it there. I'll just remove the MACD so you can see it. You can see the blue line there. So the MACD is lower, and that is the peak. So these 2 big bars of buying was a false move. It was purely manipulation. How do we know that? Because stop hunts often are rapid, sharp spikes in price. But when that occurred, there wasn't enough momentum to sustain it. So we want to see that V pattern, or that A-frame pattern, if it's bearish, hooking down. But actually the ultra confirmation that this pattern is going to play out is when the orange line crosses back above the blue line. And sure enough, that was the end of the trend, and price collapses over 300 pips, 280 pips. So MACD is used to identify the top and bottom of the market, which is amazing. So as I mentioned up in Auckland, you can actually buy and sell the tops and bottoms of the market. You can actually do it. And we do it using divergence, which is pretty cool. So that's just, so what I'm going to do is I'm going to encourage you to go and I'm not going to give a strategy around MACD divergence, but I am going to say it's something that you can start looking out for if you want to. So for example, today I posted in the chat about the level that we had the stop hunt in. So this is the Dow Jones. And if you were on the chat this morning, I posted that we had a nice stop hunt right here. And what it's doing is, remember that if we make a high in the market, which is this high here, this was the previous high of the day, anyone who is selling anywhere down here is going to put their stops above that level, because what they believe is that's the highest point of the day. Price has already failed once to break above that level. Therefore, we can put our stop losses there, and they should be safe. They probably won't get touched. So in this white box, there is billions of dollars of invisible money. And so the larger players wanted to take the market down later, but they needed to take it up and basically soak up all of that money and then crash the market. So that was a place that we never ever want to buy at. Remember my talk in Auckland, we never ever want to buy high. We always want to sell high. Now, we know already that that has been a level that has been tested once today. But if we go back to previous day, we can see that it was also tested multiple times here, here, and here. So this is already a very, very strong level. So what we've got is we've got a key level. We have a stop hunt zone, but there's something else about this level. Can anyone else recognize what it is? Something else about this level that actually gives us even higher degree of probability that price is going to reverse from here. And then we're going to look at divergence. Okay, I'll give you a bit of a clue. Okay, there's our clue. Yep, resistance. Okay, it's at our 0-0 level. Okay, 0-0. So in the market, 0-0 is a huge level. And I think I shared this last week on the NASDAQ. And if we put on this NASDAQ chart, these horizontal yellow lines are drawn at the 100 level. So 900, 800, 700, 600, 500, 400, and going all the way back for the past 3 weeks. And what you'll notice is that every time price hits the 100 level, there is some sort of strong resistance or support. Look at that, resistance, resistance. If we zoom right in, you'll see how accurate it is. Look at this, support, resistance, support, and then we finally bounced off it again here. And this was the open, so not a lot of action there. So the 0-0 level is a powerful psychological number that a lot of the larger traders are playing off. And so when we get a trade into a key level that's already been tested, and it's a stop hunt level, and we have a 0-0 level around, there's a high degree of probability on that trade actually reversing. So we already had that trade initially, and then what happened this afternoon was we came up to that same level again, and we had the trade of the day, which has absolutely fallen off a cliff since then. So why was it so good? Well, it was, we stop hunted the previous high. Okay, so when the market closed about here. And again, there's a lot of money in this white box here. So what the market did was the bigger players pushed price up and liquidated all of those stops. But notice what happened when that stop hunt occurred. We have a higher high in price, and we have a lower high on the MACD. Okay, so what I'm actually doing is I'm actually using the momentum high, which is back here in this. You can see the second high is here, but I'm going back to the momentum high. It actually gives us a bit more perspective. So we have a higher high on price. We have a lower high or lower mountain on the MACD, and it tells us that price wants to break through this level, but there's not enough buying power to actually push it through there and sustain that move. So now this is possibly the greatest trade you can ever get in the history of any price chart. It's divergence into a key level that is also a stop hunt. So we know that this horizontal yellow line is a key price level that's been tested multiple times over the past 2 or 3 days. Now we've come up to it again, and we have also hit the 400 level, almost to the pip, and we have divergence. And then that is absolutely the end of the trend, and the market just rolls over for the next 5 hours. So this is the absolute best trade you can ever make in the market. It's divergence into a key level. And if you have a stop hunt as well, that's even better. So what does this help us do? Well, when I approach my chart, I will often put on a 15-minute chart first, and I'll have a look and say, okay, is there divergence on a 15-minute chart? And the chart that I shared in Auckland was about a 95% success rate on a 15-minute chart. Here's one here. This was the exact high from last Friday. There's our divergence. So we managed to sell the high of the week, okay? And price has collapsed. Let's just remove this. Oops, not that. Not that. Let's go back. There's our divergence at the high. And from that point, we're now down over 400 pips. How do we know that was the high? We had divergence at the very top there. So I look at a 15-minute chart, and what I say is, the current session I'm trading at, is there a 15-minute divergence there? If there is, I definitely have a bias to the short side. So if I approached my computer somewhere in this region here, in this time zone, and I saw this lower high in the MACD, if I was short, I probably wouldn't just be looking for 20 or 30 pips. And as you can see, over a period of 45 minutes, it dropped 300 pips. And that was because it was the end of a trend. What divergence is telling us here is that there are no more buyers in the market. And if there are no more buyers, there's only one group of people, and that's the sellers. And that's why what we see is these 3 humongous red candles that absolutely just tank the market, okay? So divergence is telling us, if it's to the long side like this, where price is higher, it's telling, but the momentum is lower, it's telling us there are no more buyers in the market. Therefore, there's only one group of sellers. Therefore, do you want to be a buyer or a seller? I guarantee you don't want to be a buyer. So I look at the 15-minute chart. If there's no divergence, then I will actually go down to a 5-minute chart. And let's just look at the price action today on the Dow. And what we can see is, yes, we had one lot of divergence. That was the one that I pointed out, but it was later in the day, okay? Now, let's look at, let me just remove some of these lines to make it a little bit clearer. Let's actually look at the trading time this morning. And let's see what happened. So in this area here, this is from the open of the New York session to close to the end of the New Zealand morning, okay, about 8 o'clock New Zealand time. This is all the price action. So let's look at the highs and lows. Obviously, we had a lot of volatility. So we had big swings of about 190, 200 pips. So let's point out a couple of things. We have a low here. We have a high here. We have a high here. We have a low here. Now, obviously, looking at this volatility, the best possible places to sell would be in either of these. The best possible places to buy here or here. So can we use divergence to know when on the bearish side, when this sell-off is coming to an end, and when these buying sessions are coming to an end? Can we determine that? So at the moment on Killshot, what we have is we have stars. And if we put on stars, let's just turn on my full indicator. That tells us, it's not that one. It's that one there. So for example, here we have a blue star at the bottom, and we have two blue stars at the top. So they tell us that this is overbought, which means there's too much buying, price has to pull back. And down the bottom here with this blue star, it says there's too much selling, price has to pull back. Now, we can actually see that very, very clearly on the indicator, on the MACD. So I'm just going to go back here, and let's go down to a lower time frame. So we were on a 3-minute chart, okay? And let's bring up the MACD. I'm just going to remove this white box. And do we see any divergence there? Just going to try and make this clear. Okay, yes, we do. So we have divergence from this point to this point because we have a lower low in price, but a higher low or a higher valley, two higher valleys on the MACD. That tells us that this was not going to go any lower. And sure enough, price spiked straight back up. 3 red candles. In 9 minutes, it went up 81 pips. Okay, so we knew that even though, let's have a look at it in real time. What did it actually look like? Okay, let's go through candle by candle and we can see exactly what it looked like on the replay motion. So that's what it looked like. So what happened is when we made that newer low, so here's our first low and here's our low. Now, when we make this new low, look where the blue line on the MACD is. It's a lot higher already than the first low. So what do we do now? We just wait, play the next candle. Now you can see that we have the green candle come in. And notice the MACD. At that point, price is lower. The MACD, is higher. Now, we would not interrupt this because we need a confirmation. Confirmation has to be the red line or signal line crossing above or below the MACD, or some sort of trend line break or reversal candle. But let's just watch and see how this 3-minute chart played out. Sure enough, there is our hook up. So now we have that V pattern on the MACD line. That's the end of the move. So this downtrend, it has like an 80 to 90% probability that it's come to an end. And sure enough, the buyers know this and they go sideways for a bit and then they just bid the market up. Okay. So is there any way we could have profited from this on a 1-minute chart? Now, the first way that it helps us is if you had a sell here or here, and if price comes down and you see that there's divergence on the MACD, that says it's time to get out. This sell-off is probably coming to an end. So it saves you from price reversing against you and losing all of your gains. That's the first thing. The other thing is that it gives us an opportunity to reverse the market. Now, again, if you are trading against the trend, there is higher risk because you're not trading with the dominant momentum. However, the MACD tells us that the momentum we're currently in is possibly ending. So what we can do is we can actually come down to a 1-minute chart, and sure enough, we still see divergence. Now, we know it's there on a 3-minute chart. It's also there on a 1-minute chart. Now, if you're looking to enter divergence on a 1-minute chart, you just want to enter on a reversal candle. So there's your bullish engulfing candle. Again, this is much riskier trading, but Again, there's two ways to use it. One is to exit your current positions. Two is if you want a reversal trade, then you can buy the move up. So here we can see that we have a bullish engulfing candle that completely engulfs this red candle, and that confirms this divergence. Now, if we just zoom out, you'll see that we had a number of these divergences play out in the day. These are reversal trades. There's your first one, and the top of that one goes down for 50 pips. There's your second one. The top of that move goes down for 90 pips. And then we had, okay, this one here, notice this is not divergence because we have a higher high in price and the MACD is slightly higher. Okay, so that is not a trade that we would reverse on, and that is not an opportunity to exit our long position. Okay, so that's telling us that price and momentum are in agreement that the market wants to go higher. Okay, so again, I want to be clear, there's two ways to trade this. There's two ways to utilize the MACD. One is to use it as an exit strategy before the trend turns around and wipes out all your losses. The other one is you can trade it as a reversal strategy. It's higher risk. It's called contrarian trading, but it can be extremely successful because divergence tells us when one side of the market is leaving. And again, if you have all the buyers stepping out of the market and you have only sellers left, what direction is the price going to go in? Only one direction. So you want to be on the side of the trade that everyone else is on. Okay, so we're just going to come back and look at this example here on the 3-minute chart, where we ended with a higher high in price and a lower high in the MACD. Now, there's three types or three classes of divergence. This one here is the best one. It's called a Class A divergence. Okay, Class A. Class A is the best divergence, and that's because of the exaggeration on the MACD. So you can see that this is a very, very steep divergence. Okay, it's very, very exaggerated. Now, when you have extremely exaggerated or very, very steep divergence, that is about 90 to 95% probability that this trend is going to turn around. We had another one of those earlier here. This one here. It's extremely pronounced. So there's our low in price. Very, very steep divergence. Okay, and that was the end of the trend. So that's the first one. Class A divergence is very, very steep and very, very exaggerated. The second one that we have is Class B. So let's put it over here. Class A, Class B. Let's see if we can find a Class B. I haven't actually looked for one already, but they're all over the place. They're everywhere. Divergences on every single chart all the time. And here is a class. Oh, that's not bad. See, they're everywhere. Look, there's one there. This is the Class B divergence. Now, a Class B divergence is not quite as steep. Okay, so we obviously have a lower high in the MACD, but it's not quite as steep. It's not quite pronounced. It's a bit flatter. Okay, and sure enough, after the signal line crosses back down, we have a move down of about 50 pips. So it was this was absolutely a reversal. Okay. Here's another one here, very short one. Not that steep. I'll look for one more and then we will look at Class C. Here's another one. Again, we're selling the top of the move, higher high in price, lower high in the MACD. And when that happens, you go down for 130 pips. Now, can you notice that the steepness between these two peaks on the MACD are nowhere near as pronounced as the other one, which was like this, very, very steep. So this is what we call a class B divergence. It's definitely divergence, but it's not like a steep thing where you're falling off a cliff, okay? So these B divergences, class B, are also extremely powerful, but they're not as good as class A. The last one we have is the class C divergence. Now this is, while we're looking, here's another class B, just briefly. Not super steep. Actually, that's more of a class A. That's quite steep. Forget that. Moving on, let's look for one more example before we go for a class C. Class B, class B. Here's a good class B. High in price. Okay, and there's the top of the market. We sell the top of the market. And price collapses 300 pips. Okay, can you notice that it's quite a flat line? If you draw exactly from point to point, it's quite flat. It's not horizontal, but it's quite flat. So ultimately what you're looking for, and this is very simple, you're looking for the M pattern. Okay, so let's draw it out. The class A divergence is going to look something like that. Very steep. Okay. So the M, and just remember, M for Michael, very, very steep. All right. Class B. Class B divergence. It's going to look maybe like that. Okay. As you can see, it's a lot flatter. That's a class B divergence. Class C, the M pattern is going to be almost exactly the same. Okay, almost exactly the same. And this one has the lowest probability of success. But basically, if it's a sell, you just have to look for the M. And again, if you're buying, then it's going to be the opposite. So A is going to be a W. That's a very, very steep class A W. The B, class B, is going to look something like that maybe, where it's not quite. And again, these can take all different shapes, okay? Notice this one here is steep. This one's got a bit of a curve. They're none of them are exactly the same. And then our class C for the W will basically be almost double bottom. So we often will call it a double bottom in technical analysis. But the best double bottom is the steep one, okay? So this one here, big tick, this one here, that's class A. Okay, so let's have a look for a class C. See if we can find one briefly. Now, once you start looking for these M and W patterns, you'll find them everywhere. Now, let's look for one that is a double bottom, but it's no divergence. Here's one here. Okay, now notice that we have a low, but we do not have a lower low. Okay, we have a higher low, and the momentum is exactly the same. So there is no divergence. There is convergence. They're going in the same direction. So no trade. Okay, that's telling us nothing about momentum. So for example, the big move up we have here is totally random. We don't know that's going to happen. Okay, so we're not even interested in that. However, we are extremely interested in this one here. And we buy the bottom of the market. In fact, I bought that one. That was at 7 o'clock New Zealand time last Thursday. This is a class B divergence. Notice that it's not very steep, it's flat. And if you are going to trade this, what are some ways you can do it? The best way is to look for a trend line break. We look to join the swing points, and you want to, so here's our W pattern here. There's our first leg, there's our middle, there's our bottom, there it is there. So the trend line has to go through the middle of the W, the swing high, or the middle of the M pattern. Your entry, conservative entry, is when the candle closes above that trend line. So your entry on this candle is right there. And that gives you a massive trade. Here's another one here. Top of the market. Now, this is on a 3-minute chart. You can find on any time frame. This is almost a class A divergence. It's quite steep. And where's our trend line? Well, let's just identify our M pattern. There's our first high, there's our middle, there's our second high, and there's the completion of our M. Now, as you'll notice, they never look exactly the same. So our trend line is going to go through the middle there. And sure enough, once we break that trend line, capitulation, lights out, boom. So on that 3-minute, again, so the beauty about divergence tradings, especially into key levels, is they give you the best possible reward to risk you can get on any chart, because it will always be the end of a trend, which means we're starting a new trend. So if we put our reward to risk on this baby here, and if you put your stop above the high, because we already know that it's a double top, right? Now, sometimes you can get a triple divergence. That does happen, and you might get stopped out on the first one. But if we just, what am I? Come on. Even if you go down to the swing low, the previous low, which is down here, you're making 2 to 1, but it runs for 3.8 to 1. So the other way, let's just go back to today's example. The other way to get into this trade, using kill shot. Okay, so firstly, let's bring up our indicator. Okay, so if you don't want to use the trend line break, then just go with the kill shot strategy. We've now identified our double top with divergence. Okay, there's our divergence. There's our sell signal. First pull back to the averages. There's your entry right on that moving average. How about that? How about that for an entry? Like, that's just unbelievable. So we already know that this uptrend has come to an end. It's reversed. There's your sell on the 20 MA. If you put in 20 pip stop, because it was outside of New York hours, so you don't need a big stop. And look how far that baby's run. Almost 7 to 1. So if you don't, if you can't see the trend line break or reversal candle, then simply, once you've identified the divergence, simply look for the sell signal on the kill shot strategy. Now let's just go back and look for a few of these to see if you can actually use the kill shot indicator. Oh, look at that. There we go. So these are the ones that we just drew. There's your entry on the kill shot. Oh, sorry, there's your signal. Here's your entry, conservative entry on the touch of the moving average. Now, you get 0 drawdown on that trade. There's your entry, touch the moving average, 20 pip stop. And if we look at that one goes down for 7 to 1. So that's the first one. Here's the other one we looked at. Now, if you use kill shot, because moving averages are lagging, you will always enter late if you use, if you're trading reversal strategies. So for example, on this other one I've illustrated, here's your buy signal, and you don't get a pullback to the averages. You don't get a bullish engulfing. There's nothing clear. You do get a close above the 200 moving average, and then a retest that Jay talks about. Okay, so that is a very, very valid entry. But compare entering up here with entering down here. It's a 90 pip difference. And that difference occurs over 1 hour. So what I'm saying is if you learn to identify these divergences over time, you can end up holding much more of this trend. Again, even if you don't want to trade the reversal strategy on the break of a trend line or reversal candle, simply I encourage you to use these divergences as a means to get out of a trade. So for example, if you took this sell signal here and you are short, and then you see this big red candle and you decide to hold it and you're still going short, if you have a MACD on and all of a sudden it flashes this higher low, then you want to be out of that short trade. Okay, so that's the most important thing I want to encourage you if you want to use this for. Now, divergence is the most powerful tool I have ever used in trading. There is nothing more powerful than divergence, nothing, because it tells you when the market trend is coming to an end. And if you learn to identify that, then you can ride the new trend in the opposite direction. If you're trading kill shot, which I do every day, obviously the kill shot gives you a great confirmation once the trend is underway. You're entering up here. But if you can learn in time to identify and wait for the confirmation, you can get an entry 90 pips earlier. That's the beauty. And the same as this one over here. If you were entering with kill shot, your entry would be here on the pullback to the moving average. If you learn to identify the trend line break, then your entry is on that candle. And the difference between those is about 35 pips. Okay. Now, like I said earlier, I'm not going to give you a strategy on how to trade divergence, because there's so many different ways to trade it, but I am going to encourage you to start looking at it if you are interested, and just start to add it to your profile. Okay, let's just have a look at one more. All right. Okay, sorry, I just missed the questions. Let me just go through the questions and then we'll keep looking. I tend to not look at the questions. Again, there is, apart from stop hunts, there is nothing more powerful in all of trading than divergence. So I use kill shot every day, but I do have divergence up as well to notify me, to let me know if the trend is ending, and if there's a new trend on the way. Okay, so divergence works on every time frame. Yes, absolutely. So what you can have, Zeph, is you can have divergence within divergence. So if I have divergence on a 1 minute time frame and a 3 minute time frame, then it's like 95% it's going to turn around. Okay, so absolutely. I only enter off a 1 minute chart, but if I have divergence on a 3 minute, if I have divergence on a 1 minute and a 3 minute and a 5 minute, then obviously I'm not going to, I'm going to go in that direction because everything is agreeing. Now, divergence often happens at the London Open. And this is a key for all of you guys, because remember, the Opens are all about manipulation. And if you have manipulation or false moves, those false moves will not have momentum behind them. And this was the awesome trade we had last Wednesday on the Dow. This is at London Open. There's our lower low in price. And there is our higher low on the MACD. Okay, very, very steep. I'm just going to see if I can remove this MACD. Actually don't know how to do that. Anyway, very, very steep. And notice here there's no trend line break. We simply look for the signal line to close above the MACD line. And that was the low of the day. And so often I've said this quite a few times before, that the high or low at London will often be the high or low of the day. So that was the low of the day, and it was with divergence. Why? Because it was the end of the downtrend and the beginning of a new trend. All right, let's just have a look at a couple more examples. Let's look at the example on the NASDAQ today. This is the perfect example. All right, so do we see an M pattern there? Can we see an M pattern? Put a 1 in the chat if you see M pattern. No ones. Okay. Yep. Awesome, Nathan. Yep, beautiful. So we do see M pattern. There's the first leg. There's the middle. Here's the second leg. Okay. Now, do we have divergence? Do we have divergence? Type a Y for yes or N for no. Yes, Zev. So New York will often set a new high or new low of the day as well. London will often set the high low of the session, but often it can be the entire day. Yep, Class A divergence. Well done, Lisa. So higher in price, much lower high on the MACD. And so if I approach the market up here, and I put on this indicator and I see that we've already broken the previous high, there's no way I'm ever going to look for a long position. Okay, because if we put in the corresponding high, when price breaks that level, look how low the MACD is, all the way down here. It's miles down. Now, what we can do now is put on the 15-minute chart and go, well, let's have a look at the 15-minute chart. Look at that, divergence on that as well. Okay. Now, what if we go even lower and be more localized? Let's put on a 5-minute chart. Now we have divergence within divergence, within divergence, within divergence. Okay. So you're going to see a number of divergences here, but the one that breaks the high is the one that's important. And we have a 5-minute divergence. So now we have a 5-minute divergence in the context of an hourly divergence. And I actually sold this because remember, a rapid spike into the high of the day is often a false move. Okay, so now we have our M pattern. This is a weird one. I'm just going to draw it for you. Again, they never all look the same. I'm just going to draw it out so you can see it. I'll just remove this line. And I'll remove this line. It looks like this, and like this, and like this, and like this. That's your M pattern. So where was my entry this afternoon? On the break of the trend line. And then we've gone down since then. So let me just see if I can put my executions on. So there's my execution. Oh, I sold early because I knew it was a manipulation. So I sold on this candle. There's my execution. And I took my profit out down here on the blue candle. So about 40 pips. But you can see that particular one diverges within divergence. So if I approach my chart, and I remember we always want to look in, we always want to draw in the high or low of the day, the key level. So that's the high of the day. If we break above that and we have divergence on a smaller time frame that's more local, there's no way I'm buying that. Okay, we're only going to look for a sell. Let's put in our kill shot indicator. Oh, sure enough. Yep. There's our signal. Here's our sell on the touch of the moving average. And if you entered there, you were down 38 pips and you're done for the day. All right. So do we have any last minute questions? It's 9 o'clock. I'm going to leave it there. There's a lot to chew on there. Yes, that was a stop hunt, Seth. Absolutely. So the moment we got that secondary candle, I was short. Bang. That's just a big fake move. And the beauty about entering here is you have a very tight stop, 20 pips, but there's a long way to fall if it is a stop hunt. So I'm just going to briefly reiterate that I want you to focus on the kill shot strategy. I believe it's an incredible strategy. I believe it's so good because it allows for confirmation. I use it every day, but I do encourage you to start looking at divergence because it's the most powerful tool you could ever use in trading for the rest of your life. So if you learn to go through your charts, look to identify those M patterns, those W patterns, and learn to lock into your brain the memory that they are the top or bottom of the market. And the more you do that, the more conscious you will be when you're trading that, oh, it's time to get out, the trend is ending, or whoops, let's take the reversal trade because we've got divergence into a key level, it's a stop hunt, let's reverse and trade in the opposite direction. And that's going to give you the most asymmetric reward to risk trades that you can possibly get, some of which I shared in Auckland the other week. So let me just see if I miss any last questions, and then we'll hand it back to Ty. There's a lot to work with there, but I encourage you to watch this video again, go over it. I'm sure you get a lot more from it. There are no more questions. So Ty, I'll give it back to you.
All right. Wow. Man, that was so good. I have got full page of notes. Thank you, thank you, thank you. Guys, I'm sure if you are seeing this for the first time, I remember the first time I saw Divergence, it felt like, I can't remember which color pill it is in the Matrix, but I felt like my eyes had been opened and I could suddenly see things I had no idea were there. And it really is like cheat codes. So really encourage you, if this is new for you, rewatch it. Dive into it, guys. Learn about the MACD. You can go and Google, I think it's Investopedia that has some pretty good info on it, just to how that thing functions, so you can learn a little bit more about what it is inside that you're looking at, how the histogram functions, all that jazz. But you just got so much gold tonight. Divergence into a key level, 0-0 level, trend line break. Like when you have those things all lining up together at the same time, absolutely massive, man. Mike, thank you so much. That was pure gold, as always. I've got a question. So, like, looking at it right now, for instance, like, I guess here's the thing that I'm aware of is like low time frame divergences, and then what's going on above that. Like, obviously, you're gonna spot it earlier on. Like, I mean, right now I can see the 1 minute on the histogram possibly confirmed. I can see 3 minute on the signal line. I can see the 5 also almost. So they're lining up bullish, but then obviously right now we're in a red downtrend on kill shot still. How is that something you're looking at a downtrend, and if you were only looking at kill shot in a downtrend, you're looking for a re-entry? Would you suggest that in the sense of that seeing that 1, 2, 1, 3, and 5 bullish divergence, that's obviously it could be a small reversal into a, like, I'm trying to get in the context of, to give guys the context of acknowledging higher time frames, what's going on. Like, I mean, if I look at the 4 hour, it looks like a bit of a red push down on the histogram, especially signal going into almost a hopper. But yeah, just seeing those things and thinking like we're going to start seeing things turn around on the small time frames first. But I guess the statement I'm thinking of is, how much weight do people put on if they're only looking at the one? Like, you covered it well, man, like in that context of divergence within divergence. But I suppose not placing too much weight too soon, I guess, is the question, knowing that it can extend a little further before it reverses. Yeah, sorry for not being all that clear, but I think you know what I mean.
Yeah, so the higher time frame you use divergence on, the more credibility it has. 100%. So for those of you who were students here with us last year, we managed to buy the low of the market. We bought the low of the market on the NAS because we had divergence. We're going to show you there. We managed to buy the low. Here it is, right here, down there, and there's our divergence at the bottom. So we bought the low of the stock market. We also bought the other low earlier in the year. And so these daily ones have most of the power, and then 4 hour and so on and so forth. However, if we want to look at where we are now on the Dow, so in a downtrend, obviously you will have pullbacks along the way. And each of those pullbacks, some of them will have divergence. So for example, now, this trend is currently slowing. So for example, we have a lower low, and now we have divergence. However, we want to always look to the left and see, are we coming to the support? Yes, we are. We're coming into the place where price stopped earlier, okay? So this could be a place where we absolutely could be looking to exit our positions 100%, because this over here is a demand level where there's a lot of buying. And this is telling us that there's sellers are starting to run out, okay? Now, if we just change this, let's go back a little bit, you'll see a few more times we have divergence. Here's one here, and here's one here. Now, when this one plays out, let's look left and see if we're coming into a key level. Yes, we were. Now, in order to see we don't know how long this trend is going to run for on a 1 minute chart. And that's why you have to use all the timeframes together. And that takes a bit of practice to learn those. So yes, we have the end of the, so for example, there's divergence from here to here and here to here. So in this one shot, we have 3 divergences. All this is telling us is that this current downtrend is coming to an end before profit taking and a pullback before we continue down. So in order to actually hold the trade for a lot longer, you do want to consult the higher time frames. So for example, on a 1 minute chart, if we go up to the 5 minute, we can see that moving averages are open and wide, and there's a lot of separation, and we're just moving all the way down. So it takes practice. The only 1 minute divergence that I will trade in the opposite direction is one into a key level. That's the only one. So for example, this one at the moment, we have 5 minute divergence and 1 minute divergence. So look, here's 5 minute divergence. It's almost confirmed. We just need this last candle to close up. And we also have 1 minute divergence playing out. So this is absolutely an opportunity for a buy. I'm not sure why my MACD is not showing, but this is absolutely an opportunity for a buy. If you get a confirmation will be a break of the trend line. Now, if that trend line is not broken, there's no trade. But again, this is into the supply zone, into a demand zone, but it's not a key level. If it's a key level, then absolutely you can just take it. But notice that we have not broken the low of this yet. It's just in the zone. So there's more risk on this trade because we could go lower, okay? All I'm saying is that in the context of a 1 minute chart, we can have multiple divergences, but they don't mean a lot. They are temporary profit taking in the context of a higher time frame, like a 5 minute chart. So it's simply profit taking, which means there are less sellers because the buyers are taking. So there's less sellers because the initial sellers are taking their profit, if that makes sense. So using all the timeframes together is really just a matter of practice. There's no one rule fits all. For example, if you only trade off the 1 minute time frame, that's the only thing you should consult. And you should understand it well. But it's hard to really describe. It's just a matter of practice. But you definitely want to use at least 3 or 4 degrees up. So if you're using 1 minute time frame, if you want to know if this 1 minute divergence is going to be helpful, you do need to consult the 3 or 5 minute chart. But yeah, does that make sense?
Yeah, really good, man. Really, really good. I mean, that's the next thing my brain's going to now is hidden divergence in the context.
No, yeah, not yet. So
no,
yeah,
I know. That's why I'm thinking ahead of in the context of seeing the pullback and then reasons to see the trend continue. So
anyway. So the cheat sheet that Ian provided is awesome. It's extremely helpful.
Really cool.
I would encourage people who have not approached divergence yet, for those who did not trade dynamic edge, just to stick with the regular divergence that I've taught tonight, and learn that. And then in time, you can grow into the other forms of divergence. Otherwise, you'll just get confused and you'll see divergence everywhere and you won't focus on kill shot at all and you'll be second guessing yourself. So what I would prefer you to do is focus on kill shot, wait for the strategy, but at the same time, be aware and learn to recognize divergence. And as time goes on, you might learn to trade the reversal trade, and you might learn to get out early. But I just want you to grow and understand it because I believe it's so powerful and you will be using it forever.
Absolute gold, man. Thank you, thank
No
you, thank
worries.
you. Guys, drop some love and appreciation in the chat. I know that if you're brand new and you haven't seen that before, it can take a little while, but it really is the thing to watch over and over and over again. Let me there we go. There we go. There we go. Man, Mike, thank you so much. That was so well explained. I love how you have that. Yeah, class A, B, and C. I've never heard that before. That was really, really powerful, just with the different levels of steepness. So, and yeah, really appreciate that. Etienne, thank you so much for dropping those documents in there. If you haven't seen them, I tell you what, I'm gonna, in case you're watching this and we have not where am I? Let me check if I did that right. What did I do? There we go. Sorry, Mike, almost removed you from the Zoom. I was removing the pin. Let's not do that. I'm going to screen share the document that Etienne just shared so that anyone watching this recording later can see it. So that is that there, guys. If you're watching, you can pause and screenshot that really cool document. Again, focusing on regular right now, and getting that into your brains initially. There was one more that he shared, which I think I've got maybe a slightly high quality version of. I'm going to share. It's actually no, well, I'll do it very, very quickly. But it's that one there, lower lows, higher lows. Anyway, that'll do. You can pause that, have a look at that. But for the most part, Mike, thank you so much. Absolute gold as always. Guys, enjoy the week. We'll keep you in the loop about Sunday night. Don't forget that 8 p.m. Sunday. Going to be a really cool opportunity to connect and hear more of Lisa's trading journey and her story. And then keep your ears peeled for event details and dates for TAUPO. In the meantime, again, huge welcome to all of our new students and team members. So cool to have you with us. And yeah, guys, enjoy the rest of the week. Trade safe. And we'll see you all in the chat. All right. Good night, everyone.